Hi, this is Lara at Elliott Wave Gold with your extra weekly video. This week, not on gold, I'm going to do a quick video on GDX. I've updated my wave counts, which I haven't done for a little while. I have 3 wave counts for GDX. I'm not going through them in the order of probability, I'm going through them in the order in which I developed them. So at the monthly chart level, let's look at the bigger picture. So this is a big picture look at GDX. From its all-time high, from this high to this low, all of my wave counts see this downward movement as a completed 5-wave impulse. That's how this movement looks and fits best. If that's correct, and that comes with a big caveat, because GDX does not always have 3s that look like good 3s, nor 5s that look like good 5s. And so we do have to be aware that because it doesn't have enough volume for good Elliott wave structures, that this Elliott wave work comes with that caveat, and that's why I rely quite heavily on classic technical analysis for GDX. If this is a 5, then it tells us that the pullback, or this fall in price, is not over, that this is just wave A of a deeper pullback. Now all of my wave counts see this as a 5, so attention turns to what structure could be unfolding here. This first idea looks at the possibility that the B wave was relatively brief. B waves certainly can be. They do exhibit a huge variety in structure and price behaviour. And so if supercycle B is over there, what does that look like at the daily chart level? Then we've got a 5 down for cycle 1 within supercycle C, and this upward movement here would be a second wave correction. Second waves don't subdivide or cannot subdivide as triangles, so I'm seeing this movement here possibly as a completed double combination. The first structure in the double could be a zigzag. The double is joined by a 3 in the opposite direction labelled X, and here we could have a 3-3-5 flat correction, a regular flat, for primary wave Y, completing a double combination. All of these subdivisions have quite a nice fit. Except for this upward movement, it's better to see it as a 3 than it is as a 5, I think. But again, for GDX, its 3s don't always look like 3s, and its 5s don't always look like 5s. If this is correct, this is quite a bearish wave count. It would be expecting GDX to move downward quite strongly in a third wave of a third wave at 2 large degrees, and here's the target for cycle wave 3 to reach the most common Fibonacci ratio, 1.618, the length of cycle wave 1, which has its low here, and you can see that on the monthly chart. Okay, the second wave count still sees this big downward movement on the monthly chart as a 5-wave impulse. And now, what if supercycle B is not over as a zigzag? What if that was just the first zigzag in a double zigzag, or possibly a triangle? This could also be labelled A, B, C, D, E for a triangle. That's possible, but I haven't charted it, and I'm not publishing it because I think it has a horrible look. So let's look at the possibility that supercycle B is a double zigzag. The first zigzag in the double completes here, labelled cycle wave W. The double is joined by a 3 in the opposite direction, labelled X, and this low here is this point down here, and here could be the second zigzag in the structure, subdividing 5, 3 to complete, and then a 5. If this is correct, and we're seeing a big zigzag unfolding upward for cycle wave Y, it should end substantially above the end of cycle wave W, which we just saw at the monthly chart level. That has its high at 31.79, because the purpose of the second zigzag in a double is to deepen the correction when the first zigzag does not move price deep enough, and so to achieve that purpose it should move substantially above that point. Within cycle Y, we could have a 5 and an incomplete B wave. I can't see a solution with it over down here and avoid truncations. So this wave count avoids truncations. We have primary B as a regular flat, subdividing 3, 3, and a 5 down to complete. So this is midterm bearish. The target is for intermediate C here to reach equality in length with intermediate wave A. And the last wave count at the monthly chart level, still seeing this wave down as a 5-wave structure, and now again looking at the possibility that this B wave is not over here, is continuing further. It could be a single zigzag, subdividing 5, 3, 5. Let's look at this at the daily chart level, where this low labelled primary A down here is this point down here. Here I'm looking at cycle wave B as possibly a completed barrier triangle, All the subwaves are zigzags or multiple zigzags, and wave C is a double zigzag. This actually has a really good fit. Of all of these wave counts, I think this one has the best fit. It meets all the rules for an Elliott wave barrier triangle, and possibly primary wave E could possibly be could be over at the last swing low down here, or it also could be moving further lower to be a more big obvious three-wave structure at the daily chart level. And so E of a barrier triangle may not move beyond the end of C below 20.99. While price remains above this price point here, this more bullish wave count could be entirely possible. I think this would be my preferred wave count, but I would want to see some very bullish signs from classic technical analysis, particularly volume. I would want to see volume telling us that there's strength and support for upward movement if we're expecting we're in the early stages of a cycle degree wave upward. This C wave should last 1 to several years. It'll have big corrections along the way. Price doesn't move in straight lines. The target is for it to reach the most common Fibonacci ratio, that of equality in length with cycle A at 42.20. That's all from me with your GDX update, and I hope that all of our members are having an awesome day.